You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time for the rockin'est show in the world of options, at least when you're talking bi-weekly option shows, of which we're pretty much the only one. So there you go. Easy to top out there. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. You guys know how to get us by now. You can get us live every Monday and Thursday, at least for this show, 3 p.m. Central, 4 p.m. Eastern. If you grab that same link, the Mixer link, it works for all of our other live programs, of which we'll see how many we have live later on in the week. I'll be doing a lot of traveling for the next week or so, we'll see how much we can get off live. With all the podcasts, will still be available as usual for all you out there who prefer the download version. I know there are many of you out there who like that. On your own schedule, I understand. That's why I put it out there for you. You can get it nice and easy, set it and forget it, iTunes, TuneIn, Stitcher, wherever you get that stuff. However you listen, live after the fact, make sure you hit us up. Questions, comments, insights, pearls of wisdom, complaints, outrages, whatever it may be. Send those to the Rock Lobsters. Send the rest to me, though, and we'll look forward to answering some of those on the show. Like today, it's Monday. It's mail block time, so we'll get to a bunch of those in a bit. First, let me spin the old Option Block All-Star Panel roulette wheel, see who it lands on first today. First, we're going a little bit outside the hinterlands of Chicago to a very quiet, peaceful hamlet known as St. Charles, where we are joined by Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show. How goes the call rolling and the put rolling and all the other fun stuff?
Always a pleasure to be here and roll the calls, roll the puts, and broadcasting live from the hamlet. Nothing gets much better than this.
And we spin the wheel again, and it lands a little bit farther. And by a little bit, I mean a lot. All the way out to the hinterlands of Maine, where thankfully they have power because they're getting lots of snow and everything else crazy up there. At least they were. We're getting some snow out here in the hinterlands, I hear, later today. So who knows? Everything's topsy-turvy over here. But we are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show. To you as well, sir.
It is you. Well, I just say it is good to be back, although the snow has already melted and it is breezy. Thankfully, no power because all our trees got knocked down in that storm in October. So all the at-risk trees have already been felled.
There you go. You guys have had no shortage of storms over the past few months, including a lot. You don't really get hurricanes too much in New England, but you get nor'easters, which are kind of like the local equivalent. They can get up there in terms of wind speed. So you've had a few of those over the past few months as well. And last but not least, we're going to spin the wheel. It's going to bring us all the way back pretty much to Chicago. I believe that's where he's headquartered. He is Lex Luthringshausen. He is the founder, CEO over there at Tradehawk. Lex, welcome back to the Option Block program.
Thank you, Mark. I appreciate it. So we don't have that kind of weather out in the northwest suburbs of Chicago, but it's a little gloomy. But here we are. So happy to be back. Thank you.
For some reason, I thought you were headquartered in the South for some reason. I don't know why, but glad to hear you're local, so we could beam you in much easier. Now, Lex, longer term, I mean a few months, listeners will remember back when we did a little fun live show from the Option Pit Pro Trader Summit. You joined us then for kind of a quick hit episode. This is your first time on the actual show proper. So for all of our listeners who may have missed your previous appearance, why don't you go ahead, give our audience a little bit of an overview of your background in the options and derivatives markets, and then tell us what the heck is Tradehawk.
Okay, thanks. So my background, and I'm not going to say how long I've been in this business because then you're going to know I'm an old guy. So I've been around for a long time, and we started in the proprietary trading space, which means that we were those market makers, those pesky market makers down on the trading floor, making bids and offers. So that's what we did. That's where I started. We grew into a pretty large business, and then it went into the clearing side of the world as well, and did both. So we traded and we cleared, and we ran a DPM business, which is a designated primary market maker, back when the floor days. So we started in SIBO and grew our business across the globe back in those days. Now I find myself in the technology space. So I took all that wonderful knowledge of the trading floor and risk management. We built a new product for the online retail trader, and it's called Tradehawk. And what it is it's a fantastic system that we developed. And it's now live now for 6 months, and you can get it at tradierbrokerage.com. And we spin the bottle a little differently. We have a Netflix style model, which means that you pay one price and you trade as much as you want. So the commissions are bundled up into one price each month, and you trade as much as you'd like. So it's kind of a neat model.
Netflix for traders. I like that. So I could trade a ton and then maybe also stream the latest Marvel movie. What do you think? How's that sound?
You can do that too.
Provided I have Netflix as well. All right. Let's get rolling with the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the man said, this is the portion of the show where we break down what was going on in the old markets. And, if you just came in at the end of the day and just checked the close, you'd say, hey, trade war, what trade war? Everything's right with the world. The bull is back and all is green on the screen. Of course, most of the major indices closing up 1%, if not over. S&P, kind of the Goldilocks, up about 1.2% in that range. The NASDAQ, the laggard, only a mere about 1.1% or so. And the Dow leading the charge up about 1.5%. So closing near or around their highs for the day, which is interesting. Of course, the day started off a little bit the other way, a little bit of red on the screen. And then apparently everyone decided cooler heads will prevail. All is right with the world. And the trade war no longer spooking things. Of course, when all is right with the world, when there's a lot of green on the screen, that means there's a lot of red when it comes to our old friend, the VIX cash, back into firmly into the teens again, right around 1840 or so, off about 1.2 handles, or a little over 6% for all of you percents of fans out there. I know there are at least a few of you. The rest hate it, which is also fun. But of course, interesting day out here. For VIX is looking good from my vol views prediction. I got another 4 days to go, obviously, but we shall see. I believe the meatball was somewhere 28, I believe. He was crazy high on that one. So we'll see. Maybe that should come to pass. He was feeling the trade war a little more than apparently the market is today. So let's start there. Maybe we'll start with the Rock Lobster, sir. Obviously, everything is, I don't know if you got the memo, Mr. Rock Lobster, but the trade war is canceled. All is right with the world. Does that put a smile on your face, sir?
It's not that it puts a smile on my face because it was so bizarre. It's also right now, right? So I guess, this was something because of NAFTA and all this stuff. But, now we'll see. Now we'll see what really happens. The market seemed to have liked it today. They didn't like it very much last week, but tomorrow's another day. Are you calling 18 already with 4 trading days to go? I'd say that's a little that is a little presumptuous on your VIX because the VIX has been like the weather lately. If you don't like it, just pop out for a few minutes and it will change. So we'll see what happens, but we almost. This has been about a month where the futures have been in backwardation almost every day. And I'm looking at 18 quarter. Yep, still another day where VIX cash is still trading a little higher, mostly because the market's still moving a lot. Was a pretty solid range today. 50 handles or something like that. So, so yes, we still have it. Yes, we still have the volatility. It has not quite gone away yet. Just the latest steel tariff thing. It's not surprised me that he's walking back, or they're walking back from that a little bit, but we'll see actually what happens when it comes to pass. But who knew it was just something to just mess with the NAFTA people. But
who knew? It's funny. I was talking to someone over the weekend who apparently is a hardcore put seller in Ford, Lexus Ford at these levels. He was kind of sweating it out over the weekend, and I was kind of giving him a hard time, saying, I could probably get my Ford well shy of the 10 handle come on Monday, maybe the 9 handle down there, but apparently not. Ford closing a little north of 10.5 today. So apparently all this saber rattling at the end of the day isn't scary, even though some of the prognostications say if the trade war went, if the tariffs went through as proposed, it could cost them substantially in the aluminum and steel, which of course they are big consumers of. Uncle Mike, you were kind of talking down the trade war last week as well. You were thinking cooler heads are going to prevail. You were thinking maybe it wouldn't even be the worst thing. Seems like, at least for the near term, you were in near term correct. So what say you to today's just rally-ho mode, and what caught your eye in today's market?
I think I'm just going to be quiet now, because if I'm correct in the near term, if I'm quiet, then I can retire as champ. I think that's the way to do it, isn't it? No, I think overall with the trade war going on like it might be or might not be, I don't think these tariffs are going to be that big of a deal, even if they do pass. And I do think that the president's going to come down a little bit, just like we talked about on last week, in that a lot of times the way with which he'll negotiate is he'll ask for something way more than what he originally plans to get in the first place, and he accepts something less, and then the other person feels like they were able to talk him down, and he got what he wanted. So with that being said, it wouldn't surprise me if that was part of his original plan to begin with. In terms of what's catching my eye today, the financials are definitely catching my eye today. I think Goldman was up quite a bit today, and just XLF, the financial sector ETF, is up 1.4% on the day. So a lot of movement there in the marketplace. The other thing that I think we really need to continue to watch for right now is that we need to actually see where we come to after this pullback, because in looking at the charts from last week, we actually had a downturn. Our low, we actually went negative on the year last week. If you want to base it upon, I believe it was the lows on on Friday. And so we hit that. Now, of course, we recovered a little bit on Friday, and then today we had a big update. So one thing that I'm noticing on here is that the market did respect the open for the year within this last pullback. The other thing that really caught my eye the most was the major downturn that we had in the futures overnight. We have actually had a 60-point range on the S&P futures from 1 a.m. until right now. So there was a very large downturn in the futures market overnight, to where if you did happen to be awake in the middle of the night seeing what was happening, there was probably a lot of fear in your eyes, but thankfully most of us slept through it. So this is becoming also very much a gappy market. We are getting a lot of gaps in this market recently, and a lot of overnight movement. So with that, there could be a lot of opportunities there for short-term swing traders. So a lot going on, and we'll have to see where this continues to go to.
Yeah, no shortage of reasons. Maybe a good reason to sleep through the madness of the overnights, because if you're watching that, then you're obviously sweating, probably popping some Tums, like all the old short premium guys used to do on Expiration Friday over there in the old days of the SIBO, Lex and I'm sure the Rock Louse know what I'm talking about. Speaking of Lex, obviously, Lex, you have a little bit different perspective on the whole markets, obviously operating Tradehawk over there. So first off, if anything did catch your eye in today's activity, you feel free to break it down for us, but also let us know kind of what is the Tradehawk clientele, the kind of community, who are you going after over there? And then what kind of stuff are they actively trading these days?
Yeah. So what we typically see is, we see the little bit more active options trader, even though we're a stock platform as well, but we tend to see a lot more option traders and spread traders. Some of the things that have come across the bow a little bit lately is they talk about, the spiders or SPX being, they hit the 200-day moving average on the downside. They rally back up over the 50-day moving average. And now they're talking about maybe we're going to be in this little range for a little bit. Granted, you never know what happens. You never know what happens on the macro level, especially with the government and all the things we've just discussed. But we're seeing, those folks who like to sell call spreads up at the 50-day and like to sell put spreads down at the 200 or even the 100 spot. We're seeing a little bit of that. So those type of traders, I think, they're very keen on spreads, especially trying to use credit spreads a little bit. So we're seeing a good bit of that activity.
So a lot of vertical traders over there. So it's fair to say then you're going for, shall we say, the more active kind of semi-pro trader as opposed to your basic what's a call, what's a put kind of guy?
Well, it's funny because it's kind of the pivot's moved, right? We thought it was the more active, sophisticated trader, but as we found, the educators in the space tend to love the product because they can do a lot of demonstration on it. We have this new feature that we're going to unload this week, we believe. It's called a trade planner. So you can put all kinds of ideas into this trade planner and map it out. And then for the very beginner person, he or she can really see all the effects of what a multi-leg trade is or a multi-leg strategy is. So we tend to feel that, it's sort of morphed a bit down toward the middle range of user in terms of his understanding, and the educator takes the product and really, really teaches on it, which we just love. I mean, and I love to help out on webinars like that as well. So that's what we've seen in terms of pivot, I guess. Best way to say it. There
you go. You answered my next question. I was going to say, obviously, the pricing model is for the hardcore who like to sling a lot of contracts every month. But I was also going to ask you kind of what is your other, obviously go-to feature people are going to look to you for. And it sounds like, is the trade planner it, or is there something else under the hood there, under the sleeve over there at Tradehawk that's going to really lure people to the dark side, so to speak?
Yeah. So that's a big feature. We have in this whole suite of things. So we will have the, what do I call it? We call it pilot, but that's what we call it. But what that is it's your automated risk management system. So I don't want to scare people. Automated scares people, but it's more signal-based, alert-based. If you want to take the next step and say, okay, I want to OCO that baby out, and I have this order on, and I want to just protect it on the profit side, protect it on the stop side. That's what I want to do. So we call it pilot. It's a risk management system for you, and it's not crazy algorithms. I don't want anyone to get scared about that. It's very user involved, and you set your prices. We just take care of everything else. So pretty cool stuff.
Interesting, getting a little let's say low grade algorithmic risk management over there at Tradehawk. Interesting stuff. Check it out, listeners, if you are indeed so inclined. The URL is actually my Tradehawk, so don't be fooled out there. It is my Tradehawk if you want to check it out for you. If that Netflix model for options appeals to you. I'll tell you what, Lex, it's going to appeal to somebody, particularly last month. We're looking at the numbers here just in from OCC. For February, if you thought to yourself, hey, a lot of, shall we say, topsy-turviness in the market in February, one of the more rocking Februarys in recent memory, do you think that translated into a little bit of options volume and volatility? If you said yes, spoiler alert, you are correct. February was a pretty rocking month, up a mere 43% from February of 2017. February last year was 333 million contracts. This year, 477 million. Again, that's across the full suite of what OCC clears. So there's a lot of stuff in there. We're going to drill down the rabbit hole a little bit more because obviously we're more on the exchange-listed options front. Exchange-listed options volume was about up 44% to 464 million contracts. That shows about 13 million contracts or so of other stuff that they clear over there. Drilling down a little bit farther, equity options volume about just a million or so shy of actually about 2 million or so shy of the 400 million mark, up 40% from February of last year. Drilling down a little bit farther, ETF options volume is 198 million, also about 2 million shy of the 200 million level. Up, that's only a mere 15% increase from February of last year. Index options, 66, almost 67 million, up a whopping 70%. Again, we saw huge moves in the S&P and other indices, so that's not entirely surprising. Up 70% from February of 2017. Year-to-date ADV this year is up a staggering 37%. I don't think that's going to hold for the entire year. That'd be mighty year if that was indeed the case. If you're up 37% for the entire year, I think the entire options market would have a lot of smiles on their faces. Maybe some retail investors out there, maybe not, because that probably would signal a return to dramatic volatility. But that said, that would be interesting. I mean, last year when we were barely scraping by with a couple of percent, and everyone was excited to see that. 37%, even though only 2 months into the year, is a good one. Year-to-date ADV in the index options up 58% from this time last year. Also worth noting, they clear futures over there. Futures kind of making up the lion's share of the rest, about 12.7 million contracts. Most of that is VIX futures, 27% increase from February of last year. Lex, you're the guy representing the kind of volume game here on the panel tonight here. Does this kind of jive what you guys saw at Tradehawk? Was February kind of a rockin' and rollin' month for you guys as well? Especially for you guys, you have kind of a one size, one price fits all kind of model. Were your customers really trading it up last month?
Yeah, I think it's kind of a double edge a little bit. So people, when you have this kind of volatility, people do get a little scared. The retail side gets a little bit nervous, right? The professionals, I would say that they love volatility. Anything that's chaotic means mispricings, means, okay, there's an advantage, right? I think the retail side, as busy as it was, I think they still are a little bit, uncertain and a little bit afraid. So I heard from the retail side that I'm sitting on my hands right now because I'm nervous, that sort of thing. More professional side, oh my God, this is unbelievable. I love when no one knows where the VIX is going to be the next day. So kind of a two-edged sword, I would say.
We kind of have debated that before on the network, on this show, or even on VolViews. There is that number, and people debate and argue about what that number is, but I kind of call it the take my ball and go home number of VIX, where it gets at a certain point, it's good, premiums are up, I can sell options again, it's nice, it's good. People are excited when you start getting into the 20s, 25s, even into 30, people can usually kind of bear with it. When it starts getting, my usually take your ball and go home levels, usually around 35. I think that's where a lot of people seem to kind of fall out, but lately it kind of depends on frame of reference. When the VIX was so low for so long, some people could have said 25, who knows? Some people usually will say 40 or 45, obviously depends on what you like to trade and everything else like that. But you're right, at a certain point, a little bit of VIX is a good thing. Too much VIX, maybe not so much. I don't know, Rock Lobster, we debated this before. What do you think is the take your ball and go home number for VIX these days?
That's an interesting one. It depends on, I would say once you're into the 20s, people get a little nervous. Let's call it 23, 24, something like that. It gets people, those days tend to have those big spikes. But, I mean, the take the ball and go home number was 14 to 20 this year. I think it took out, I can't remember a time when that move took out so many people. It took out, SVXY, XIV. Well, I mean, they're there. XIV is dead. But, I mean, those products just crashed. 12 to 20 is a big move, but man, I mean, is it that big of a move? So I think the take the ball and go hold number, just seeing from the screams of all the short vol people, it almost felt like this year after 15, everybody, there was some, there's a little gnashing of teeth past that, but I say normally we'll say 24, but this year 15 seems to that move, once we moved past there, everything sort of fell apart.
Yeah, it's interesting. I'm actually while we're doing this, I'm going to put it out for a little poll, see what a little flash poll, see what our audience has to say, because this is always a fun debate point. Uncle Mike, weigh in really quickly. What do you think is that take your ball and go home number for the broad average of the investing public?
I would say high 30s typically, not necessarily this year, but high 30s. I just always remember back when the VIX in 2008, when the VIX was in the high 30s and everybody was saying, how can we short the VIX? It's so high right now, Mike. And then about maybe a month later, the VIX, or maybe I think it was a couple of weeks later, the VIX was at 80. So I would say high 30s is the take your ball and go home number for a lot of people. But in recent markets, it's much lower.
Yeah, it's all frame of reference. I'm with you. I think 35 is the level, but when it was lurking around 9 for so long, when it got to 20, everyone lost their mind. So there you go, all frame of reference. Meanwhile, though, we're going to keep on rolling into our new frame of reference. Time to put our odd and weird hats on because it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we break down the weird, the wild, the wondrous, the sometimes head-scratching paper that obsesses us here on the old Odd Block. Going to kick things off with our favorites, of course, the old Tesla mystery puts. All of you out there who love write in those puts in Tesla, you know who you are. A lot of you were happy for a while there that we were bouncing off the 300 level. It seems like today, getting a little bit closer to that again today, off about 0.5%. And the end of the day, how low do we get intraday? 329, so not too bad. Not quite threat. I think it hit low 320s last week. So all of you who were short the 300 line or around that level, were obviously sweating it out a little bit. This today, you got a little bit more room to run on the downside. But let's go look at our old friends, the mystery puts, these bizarre ones out here in good old Tesla land. Yes, of course, the Jan 2019 50s and the Jan 2020 50s. And they were kind of quiet today, actually. Only a 6 lot of these 2019s going up. OI about 36,300 out there. And the 2020s comparatively quiet as well, only 26. Yet about 4x going up out there in the longer term. The longer term ones starting to get a little bit more action out there. They're just a hair under 8,000 contracts open out there these days. So interesting stuff out there. Not a lot of love for the mystery Tesla puts today. I guess we're taking a little bit of a break on whoever is out there slinging those bad boys, saying they don't want to. I don't know, Lex, do you have a lot of, is Tesla the name du jour on the Tradehawk platform as well? Do you have a lot of hardcores blasting out premium on my Tradehawk as well? Or is this kind of just a unique to our audience?
I would say, yeah, Tesla's one of the more popular names. I think, believe it or not, Amazon at $1,500. People are, I guess, a little mystified. But hey, it is what it is, and it trades. So that's another big name, I believe. So yeah, Tesla not as much, but Amazon way more.
More Amazon. Interesting stuff. Amazon, of course, lighting it up these days as well. It seems like ever since the Whole Foods merger went through, I'm seeing more and more stories and articles about people pushing back against the perceived dominance of Amazon. For whatever reason, that seemed to be the straw that broke it for a lot of people when they merged and moved into the world of organic groceries. That was a bridge too far. Not when they control the entirety of the backbone of the internet or anything else like that. That was fine with people because it was kind of under the radar. But when they bought their local grocery store, that was a bridge too far, but that's a conversation for another day. Instead, let's move on. All the news has been of late about trade wars. Will they, won't they, saber rattling and all that other fun stuff. Well, of course, that's going to play out in a lot of areas. We mentioned automobile makers before, of course, the indices, and indeed in some of the select indices as well, like our select spiders over there. In particular, the Materials Select Spider, aka XLB, closing today 59.74, up right around 3/4 of a handle or so. This is the name that does, let's see, about nearly 9,000 contracts a day. Today doing about 42,000, almost 35 to 1 puts over calls, and that's because of that 45 or so, 41, almost 42,000 listeners. Pretty much 40,000 of it came, and what looks like a pretty sizable, looks like a put roll, could be additive, but we shall get to it. What caught our eyes, listeners, when you scroll down, you'll see it jumping off the chain there in the June expiration cycle. It was the June 60-50 put spread going up 20,000 times. Looks like paper coming in near the offer, or close to $3, $2.95 on the 60 puts, and then coming in right in the middle of the range for about $1.43 for the 56 puts. Again, doing it about exactly 20,000 times. Worth noting as well, because the OI on the 60 strike is exactly 20,000. Quinky dink. And the OI on the 56 puts 1549, so 1549 obviously. So these, of course, these 60 puts a little bit in the money, so perhaps it is the time they want to roll these bad boys. Worth noting, these 60 puts were not opened too long ago. They were opened pre-trade war in terms of official, but not too much beyond it. They were opened back on January 18th. Someone came in, looks like they lifted the offer actually for $1.26, $1.27. They did them on splits 20,000 times, which makes it kind of interesting because today's trade also, it looks like initial blush seems like they're closing out a short put or rolling it down to a less scary strike. But it looks like they were gobbling these things up back, in mid to late January on these bad boys. So not a lot of time, and these puts are already in the money, which is kind of interesting. Mr. Rock Lobster. Let's look back at the year that's been out here in XLB. This thing kicked off about a year ago in the low 50 range, and it's kind of been slowly rallying higher. Got as high as about 64 back. Actually, not that long before these puts were open. That around the time these puts were open, about a week or 10 days later, is when it hit about 64. Then it kind of just fell off a cliff back down to about 57, 58. It's kind of been vacillating in this range ever since. So this guy had some interesting timing, Mr. Rock Lobster, on these 60 puts, and now looks like he's rolling, or perhaps do you feel he's doubling down and then also adding on a put spread for fun? What's your feels? What is your spidey sense telling you here on these XLB put vertical?
It's feeling a little bit like that. Like here, they're going to take some. They want to roll down, although I have to say the pricing is kind of middling in the middle. It is a tough one, but I have a feeling they're taking. It feels like
the pricing is the wild card on this one, definitely.
Running,
yeah,
don't you?
The pricing is the wild card on this one, because first blush you think, oh, they're rolling short puts, but then you start digging into the OI a bit, you realize they opened them not that long ago, and looks like they bought those, so that makes it a little bit weirder.
Yeah, you would think they're okay. You had the move down; it's down quite a bit. Now you got the trade war thing. They're taking some money off the table and rolling down a little lower, but you would think that's what they were doing. I don't know. Possibly it could be closing a short and just reestablishing it a little lower and, trying to hit it that way. But, not a super great return on capital if that's the, what do you get, $1 put on a $59 stock. So, till June. I guess, if you want to buy it, I guess that's certainly a way to do it. I don't know if Tusaw would approve of it, but he might as a way to get long on that one. But it just makes sense that it's a roll down and everything's all when you have that little magic 8-ball when you were a kid, all eyes point to it should be rolling down when they own the puts. So just a bit strange on the execution prices.
Yeah, all the pricing gets a little bit funky. By the way, Lex, let me know if you want to chime in on any of these bad boys. We have a few to get through. Then we'll get into a bunch of questions. It is Mail Block Monday after all. We'll just do one more here in the old Odd Block today. We're going to wrap things up on good old Ultra Petroleum Corp. I wonder what they make. Ticker symbol UPL. Closing today, $4.16. This is our resident cheapie for the day, listeners, up nearly over 11% today, or 43 cents. This is one of our stock is an option type names. This name does about 1,400 contracts a day. Today, doing 31, almost 32,000. This might be a record, Mr. Rock Lobster, for our highest call to put ratio we've seen on the odd block. 2,255 to 1 calls over puts. So naturally, we're going to look at the puts today, all 14 of them. No, it was the calls, of course, which caught our eye. Kind of interesting. Like, this one is already controversial to begin with. You've talked about this many times on the show before. We've asked you guys, what do you feel? Do you like trading options on these cheap sub $5 or sub $10 names, or do you feel the stock itself is an option? Certainly a lot of people on both camps on those. But even interesting, this one that we saw someone deciding today, or they have in the past, and deciding more again today, that they want to sling some size options on this bad boy to the tune of, what caught our eye initially were 20,000 of the Jan 7.5 calls. Yes, 7.5 calls. So size out of the money on these bad boys. Going up for 85 cents, right around or near the offer there. Also worth noting the OI, exactly 20,000. Imagine how that kind of works out. That OI was opened not too long ago, back on the 1st, for 65 cents. So question is, are they piling in, or are they deciding to take their 20 cents and perhaps get the heck out of Dodge and then turn around? But also, interesting enough, not related paperbacks didn't go up at the same time, but it's kind of hard to think that it wasn't at least influenced by, if not done at just a later time by the same person, which are the April 5s also going up for size today. When we started looking at these this morning, there was about 4,000 or 5,000 on the tape. At the end of the day here is actually 10,600 going up. The initial kind going up, paper just crushing the bid for 20 cents. The latter prints looks like they're probably in that same ballpark. Again, total of 10,600 going up. OI non-existent, so all opening. So maybe Mr. Rock Lobster could be someone piling on a longer term and then maybe financing with some near-term calls, which would be kind of a bit of a funky vertical. Also, interesting strike selection, 5s on the near term, 7.5 longer term. Or they could be deciding to get the heck out of Dodge. They realize, 7.5 by Jan. This is Jan 2020, by the way, listeners. So Jan 2020, 7.5 by Jan 2020. Perhaps that was a wee bit optimistic. Let's close those out and instead go to a, shall we say, a little bit more aggressive front month, or April, I should say, 5 strike call. Let's look back at what's been going on out here in UPL for the past year. Kicked the year off pretty strong. 13.5 was where it kind of was about a year ago at this time. Then it's kind of been on a long, slow decline. Like I said, right now right on the nadir of that graph, right around $4. So who knows? Maybe in hindsight, Mr. Rock Lobster, those 7.5s are not quite as crazy as they maybe appeared. I don't know. What's your spidey sense telling you on this one? You think they're closing in Jan, giving up the ghost? Think they're piling in and maybe financing with April? Maybe they're just saying, let's spread our love around a little bit. In this case, very far. You think it's completely unrelated to what do you feel on this one, sir?
Well, when you think about it, you have 20,000 versus 10,000, all trading the same day. So I have a hard time believing they're not related.
Coinky dink, sir.
There is a little bit of a quinky dink there. The next part, I thought UPL was one of these. They were kind of like one of the more leveraged oil producers that went bankrupt or close to it, 2 years ago, 2 or 3 years ago, when it was all kind of ugly for oil, ugly for a lot of the more leveraged producers. So I feel like somebody wants these things on the April side. I don't, maybe they're just taking the money. I have to see the opening prices on the 7.5s, but still, this is kind of trading at the bottom of the range. It still feels like there's some kind of reverse split or something in here from when it was a near dead stock. But I'm not totally sure. Just somehow in the back of my mind, I remember that. But I can't believe they're not related though. But the 5s for a quarter, somebody thinks something's happening.
Yeah, someone getting a little bit aggressive, deciding, at least in the near term, probably not going to get out of 5, and if they are, maybe they're long a ton, and deciding they'll get the heck out of Dodge for that level, maybe giving up on the shall we say, more optimistic 7.5. Speaking of optimism, I'm always optimistic on Mondays because it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, guys, like I mentioned earlier in the show, I put out a little flash poll to our audience. I asked you, what do you guys think is the take your ball and go home level for VIX? I gave you 3 choices, 35, 40, or 45, with others, and see what others people have written in with. So far, well, I won't reveal the voting just yet. This is the quick one. This is the flash poll list. This is only for the duration of the show. So if you're listening on the podcast, unfortunately, you missed your chance to vote. But still, interesting stuff. I don't know. Let's go with Lex. I didn't get a chance to ask you yet, really. What do you think? Well, if you have a level, you take your ball and go home level for VIX. What is it? And then B, what do you think our audience is voting for? I think they're voting for one of these 3, or maybe they have some other crazy level in mind.
Yeah, well, Kyle, I'll tell you, back when we traded this, my take, the ball is probably around 30 was back in the day. Now, the other gentleman mentioned, we're down at 10 for the longest time, or 12. All of a sudden it gets to 20. That's percentage-wise, that's a big move. People get a little scared. But, the kind of melting of butter at that price tends to happen, although this time it didn't. So we always had the 30 to 35 number as I'm scared to death now. Now it's high for a reason, and I'm confused, and get scared. So that's kind of what our feeling is, I think. So
yeah, that, and my anecdotal polling over the years, a lot of people seem to settle out on that 35 level. Mr. Uncle Mike, you gave your vote before. What do you think our audience is feeling?
I think it's a similar number for the audience, in that, and a lot of times our audience actually would like the VIX at a higher level to sell more premium. So I'm going to say a similar level. I think the audience and I are in agreement.
Mr. Rock Lobster, you were saying 20 a little bit ago, so have you adjusted your opinion? And what do you think our audience is feeling?
I still like the mid 20s for me. Is anyway. That's the I guess my personal line is a little different than everybody else's, but I still think the audience is in the higher 30s. That would seem like that's what 2% a day, so somewhere around there. So I'll say the audience is saying 35. 35.
Interesting stuff. Well, so far our audience, at least voting in the initial minutes, you got about, half an hour left for this one. Looks like 45 is the winner with 44%, 31% coming in for 35, 25% saying 40. Don't have anybody chiming in with any others, so we'll see how many they come in with in a little bit later. Again, you got a half an hour, clock's ticking on this one. This is the quick one. This is the flash ball. Our actual question of the week is more of a prompting. It's a reminder. Actually, Lex, this is good timing for you to come on the Option Block program, because we are about to, in 1 week, kick off our much anticipated, or perhaps by the brokers much dreaded, I don't know, but our much ballyhooed nonetheless annual Options BrokerMadness Tournament. Yes, it is that time of year again, listeners, where just to celebrate all things March Madness, we decided a few years back, and it's kind of become popular, it's kind of like our annual thing now, to pit the brokers against each other in a neck-and-neck battle royale where 16 firms can enter, but only one can leave. There can be only one at the end of the day. So we put out the nomination ballots this morning. You guys can send in your nominations for your favorite options broker, or maybe you want to nominate your least favorite, a firm you hate, and then you can vote against them in the broker. Whatever floats your boat, get those nominations in. We're going to put together our brackets of 16 probably over the weekend and get those first, maybe even earlier, and get those first brackets ready to go for Monday of next week. So I don't know, Lex, by coming on the show today, you may have perhaps earned Tradehawk a spot in the brackets. What do you think, or does that make you nervous?
I don't know. I mean, I don't think it makes me nervous. We're not a broker. We're aligned with a broker, but that's okay. We can handle it.
Well, there you go. You can handle it nonetheless. Yeah, maybe we could mix you. Yes, the Highlander. Yes, it was a Highlander reference. Yes, Mr. Rock Lobster. Well done. I snuck that in there under the radar for all out there who appreciate that fine, epic piece of cinematic work there. We asked you guys last week, by the way, a lot of debate about SVXY. Will it survive 2018? All that kind of stuff. But we asked you, we're going to table that for now and just ask you, for all of you who are still trading it, what is your weapon of choice? 61% saying you're naked long the underlying these days, which is perhaps a little bit worrisome given the precarious somewhat spot that is in now. We've seen the issuer maybe not full of enthusiasm for the product. We know that counterparty issuer / risk is kind of where the unknown unknowns are lurking these days. 18% saying they're long verticals, call verticals, 10% only saying long put verticals, 11% saying they're long the underlying with a hedge. So perhaps a little bit of alarming numbers. I thought maybe the call verticals would do a little bit better here. All right, we got a lot of comments and questions, a lot of them. Actually, let me ask you, Lex, because you're kind of on that vendor kind of execution side of the space there as well. We've debated a lot about these kind of inverse vol products. Some people think they're the worst things on the planet. Other people think that, they kind of performed as designed, even though that design maybe had been dubious. Some people think maybe they should have been disclaimed more. As you, who's out there kind of the front face to the retail public for a lot of these trading things, what are your thoughts on the whole inverse vol space and the way it played out over the past month?
Yeah, I mean, look at it. My feeling is that people who, the big institutions that put these out there, they put them out here for a reason, right? It's another clever trading vehicle. And let's not kid ourselves, there's money involved. How do I feel about it? The volatility one, I'm not a big fan of. You get a ripple like this in volatility, and you have an inverse that can go to, all of a sudden it doesn't have the same relationship it does that you thought it did. And that can mess up a lot of portfolios. So I'm not a huge fan on the volatility side.
So are you guys going to charge like special fees for people who want to trade options on these at Tradehawk or anything like that? Or are you going to kind of just leave them all lumped in under the old one price, one flat fee for everybody?
Yeah, no, it's standard. It's standard. So we don't, there's no special fees unless, it may come to margin parts of it if you're going to hold positions in terms of, 3 times, 2 times. That's pretty typical and standard in the industry. But no, there's no special fees for that for us.
Well, there you go, listeners. So you can get your he doesn't like them, but he won't charge you more to get at them, which is there's a lot of people weighing in on this one, as you might imagine. Alpha Maker Chris saying a lot of people were robbed in their sleep. He's, of course, referring to the whole SVXY debacle. It's absolutely disgraceful. They should have been given several weeks' notice, not one day. People lost fortunes overnight for reasons not of their own doing. I certainly can empathize with those comments. Such a short turn. People were loading up on options that day. We saw a lot of that flow going in the call verticals and things, only to have them get hammered in the overnight. The premiums just went to not to zero, but pretty darn low, simply because of events that were out of their control quite a bit. And we had been advocating for a while, if you are going to trade this thing, which we kind of cautioned you against, do it in very, very risk mitigated ways, very tight, and probably with speculative money that you can afford to take a little bit of a flyer on, maybe some cheap call verticals and things like that. That's why I was hoping that would do a little bit better in our poll, but c'est la vie. A lot of you angry about this. Scott Somer saying, no fun if you were long anything except deep in the money options on SVXY or UVXY. Highlights unexpected danger of trading options on leveraged products. He thinks it would have caused disorderly options markets if they did it during the trading day, though. And it's a shot across the bow if you are trading options on velocity shares products as well. Oh, he also chimed in, I wonder how many people took them. How many of them took people to the horse? Maybe he's an old SIBO guy. I don't know. Obviously, a SIBO reference to the place where, shall we say, disputes were settled outside of the trading floor. There. Let's see. He's going on about that iron condor. It doesn't have the long put wing again. We touched on that last week. We don't like that strategy. We don't like just blasting out the guts. Have the long call to hedge, but no put hedge. That one, I don't think anyone here. I think Mr. Rock Lobster referred to it in a, shall we say, not family-friendly manner. So we won't discuss that. Here's an interesting one. And maybe, Lex, you might have an answer for this one, too, because this is kind of in your wheelhouse. This is the question from Stiffle. It says, great show. Well, thank you. Agree with Mark about the OI change graph in live vol. It's very useful. I guess he's talking about when I probably referred to this on the show before. One of the good tools if you use it to change and check the change in OI, which is useful when we're doing stuff like the odd block, for example, is that graph they have on live vol. You can pull up a strike and they'll show you when the OI kind of change. You see the big spikes, and so it's helpful if you're trying to hunt down, when these positions were opened, for example. He says the only problem is that it only goes back a few months, and it's true, it does. It goes back, I'm looking here for the one we were just talking about, it goes back to about beginning of February. So yeah, beginning of January, actually, so about 2 months. He says, are any tools out there that go back further? Well, this is an interesting question. There are ones that are specific. I think if you know kind of exactly what you're looking for and you can type in the date, then you can go for like a service like a trade alert will, I believe, do that, where you can type in the date. And if you know the strike and everything, you can type in the date and the strike, and you can see exactly what the OI was and what traded that day on that particular name. But that means you have to have a little bit more info. I think if you're looking just for graph, that's an interesting question. Let's go to, I don't know, Rock Lobster. What you use all these products a lot. So what do you say for our friend here who says the tools go back? He wants a tool that goes back farther on like the OI graph.
Every time, I'm looking at it. I'm looking at maybe 2 years back in live vol, unless I'm totally crazy. You can get. I'm looking at 2016. So you can go 2 years back on the change in open interest bar graph on live vol in the bottom, if you so choose. So you need to go. I don't know what this sense of going farther back than that is, because all those options have expired already. So, am I missing that?
I think maybe he's looking at I think I see what he's looking at. He's looking at if you go into the chain and you just click on a strike because you want to look at the bids and offers in the book there, that part only goes back 2 months. So that must be what he's referring to.
Okay.
I think you're referring to more of like the big charts page.
Yes. Well, I think if he does go back there, he could see spiky action, and you can go back on the time and sales, but it's kind of tedious without the chart. So, okay, I understand what his question was now, but at least you could see a spike going back that amount of days to expiration, if that helps at all. It's better than nothing.
There you go. I guess we're doing tech support for live ball here. Check the charts page and check it out. There, Lex. Obviously, you guys offer a lot of. You said you have a screener and a strategy builder over there. I forgot this person's name. Stifle. Can they go to your service and do this kind of thing? Can they search for changes in OI back a ways?
Yeah, we don't offer the OI part, although we do have the data, which, listen, I'm always up for new great ideas. I mean, it's super easy for us to implement because it's all key about data, right? We have access to all that historical stuff. We do some things, but we don't do open interest going back very far. Not 2 years. So not for open interest, for other features though.
So there you go. It is available on certain platforms. It kind of depends how much data you have. If you know the month and the strike and everything else, you want to kind of just go see what was going on that day, then there are platforms that will do it. If you kind of want the more just look at a broad chart, then you could do it the way we just discussed. Let's see, we got time for so many comments on the whole SVXY thing. People continue to just chime in. Oh, you like this? Let's see. There's the comment here. That's the comment from Danny Bazak. Says these funds. I guess this is back to the whole obviously inverse vol meltdown. These funds are tracking an index. The index itself was down 96% on February 5th. This is a flaw in index design, not a fund problem. ETPs just can't decide to suddenly not track the index they are mandated to track. Someone needs a better mousetrap to track short vol in index form, or a more realistic conclusion is that short vol is not a realistically scalable concept in index/ETP form. In my opinion, short vol is something that is better served by active management, not a passive index, which is a design flaw of thinking one should make an index designed to replicate a short position on anything. In reality, someone who is smart enough to be short is smart enough to manage the risks of being short. These indexes have zero risk management built in. Not really a question, more of a long and lengthy comment, but there are a lot of people who are on board with that. I think Mr. Rock Lobster, you can probably get behind some of what he's saying there.
Yeah, well, the thing is, you can, if you're short a future and it doubles in price and you have 50% margin, how long can you keep that position on for? You run out of money. It's hard to short something without being short at something. That's why options have premium over parity. So the thing is that was something that actually we discussed all of that. There's an index, but there's one thing about a theoretical value, and there's another thing about actually trading the liquidity and having the liquidity to do things. And I'm sure Lex can attest to this. I'm sure in you, there was a time when your sheets might have said something, but your nose was telling you something drastically different than what was going on in front of you at that moment. So, I understand the gripe. Yeah, it's supposed to track an index, but there is a liquidity problem with and a management problem inside. So I would agree totally, though, that their risk management in the product, there was only so much they can do, because at one point, I just believe these products, at the time they decided to execute what they needed to execute, basically became the market. And once you're the market, then you're done. You're like long-term capital and all those other, all those other fantastic blowout stories. that once you are the market and you are trying to exit, your time is done. So I'm not disagreeing with anything this guy says, but that was just, again, this show has banged the drum on some of that stuff a little bit. But it's hard to just get away from those returns when somebody sees them up and up and up and up those fantastic returns. People climb in. So yeah, I think there were problems with it, and they might end up having a problem with it because the fund didn't track the index. But they also they say in all their literature that we could suffer a catastrophic loss, and you could lose a ton of money if volatility really blows up. So, I mean, it did what it said it could do in a bad way. So, but it seems a little bit like they're almost predestined to fail, even though they haven't in the past. It seems like they did this time.
Does seem like that indeed, and we got to keep rolling because we could talk. You guys want us to talk clearly SVXY the rest of the show. We got to keep rolling though with our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, you know the drill. Portion of the show where we break down what's cooking this week. There still are a few earnings. So those of you who like the sort of more micro-focused type thing, we got Target for the open if you haven't got enough retail yet. Tomorrow, we got a little bit later this week. You got more retail in terms of Costco after the bell on Wednesday and a bunch of other. I think we got Kroger Thursday. So if you're into the big food and retail chains, then there you go. Got some big ones there and all other weird ones. We're kind of on the tail end of the season, so to speak. That said, Uncle Mike, what are you keeping an eye on for the rest of this week at least until we gather together here on the show on Thursday?
Well, watching the trade war, if it is indeed a war, or watching the made-up trade war to get the market to come down so that the bigwigs could buy the dip. Who knows what it actually is? But definitely watching the news for that respect, and also watching to see which sectors are actually going to be the picks to click over the course of the next couple of weeks. And just as per usual, focusing on those numbers, seeing if maybe we can get back up to the 2,800 level in the S&P this week. It's not out of the question.
There you go, putting a little tinfoil. You've been reading some Zero Hedge, Uncle Mike, talking about the big wigs selling off the market. We'll leave that where it may. Instead, Mr. Rock Lobster, same question for you, sir. What is on your radar for the rest of the week?
If all of this was the most awesome smokescreen for a trade negotiation ever, I almost think we should start going back and see reruns of what was his show, The Boss, or what was that show? I never even saw it. What was it?
The Apprentice.
The Apprentice. Sorry, The Apprentice. I had to think there's got to be some playbook out of The Apprentice that he's following or something. Just he makes this big noise, and then he's like, okay, I'm negotiating hard, and then I'm going to throw these huge tariffs off, and just so I can get some of Canada and Mexico to move on trucking and lumber or something like that. So the market seems to not think it's going to be a big deal, at least today, because after all, what are we? We're only 100 points away in the SPX from the all-time high. So how bad can it be? But VIX is definitely not there. So as long as it's volatile, we'll probably get a little bit. VIX is still up there, still going to get the moves. And it just doesn't feel like it's going away tomorrow, although they did take a little chink out of it today.
And last but not least, Lex, what is on your radar? Easy for me to say 5 times. Lex, what is on your radar for the rest of the week, sir?
I think I'll reiterate what the Jen said. I'm such a big volatility follower. I really always enjoyed it. I know that's almost like why would anyone say that? But that's what we did. Specifically, again, I'm not an investment advisor, so take my disclaimer with a grain of salt. I've been looking at GIS, which is General Mills. So I think that one's been unusually beat up, and I've just been kind of watching that a little bit. So, but yeah, that's about it.
All right, everybody. That music means we've come to the end of another epic journey through the world of options. What a one it was. We started all over the place, got into macro and S&P and VIX. and got down the rabbit hole in SVXY and some other unusual activity and all sorts of other fun stuff that was cooking over there. But before we go, let me go back around the horn one last time, chat with each of my cohorts here, see what they have cooking that may interest you. Lex is our guest. You get pride of place. By the way, I forgot to mention at the top of the show, the URL is indeed mytradehawk.com. And you guys, I believe, are our first Tradier-affiliated firm here on the show. Tradier, of course, being that kind of API-oriented broker/execution system. So you guys, I guess, Lex, is it fair to say you guys are effectively a really nice high-end front end for what the Tradier is offering?
Yeah, I would say so. We have a lot of traction, a lot of interest. We have a paper trading account too, so you don't need to have an account at Tradier to try our paper trading. Super effective, really cool stuff, and you can put on all kinds of what-if trades and manage those in real time as well to kind of test your strategies along the way. So, yep, definitely so.
Well, we're fans of paper trading over here. Check it out, mytradehawk.com. Kick the tires, light the fires, as they like to say. Check out those scanning and analysis tools. Yeah, we'll have to figure out, Lex, how you guys fit. If you want to, if indeed we have room in our 16 at broker, you might be able. 16 is a lot. We get a lot of weird nominations in this thing. We'll have to figure out. Maybe it's Tradehawk by Tradier or something like that. How does that sound for a bracket? There we go. That might sound it. That way we kind of combo of the two, because you're not just Tradier, but you're not also just a... So, yeah, that's the problem with making these brackets. People fall into all these little weird side categories, and you don't have a place for them, so we'll see. We're actually also, spoiler alert, also thinking about maybe doing like a favorite feature of a brokerage platform, or in this case, maybe a front-end platform. So if you guys have nominations for those, maybe we're looking for those in a little bit. So maybe we'll add some addendums to our big broker battle, our broker madness for this year. Stay tuned for that. And Mr. Uncle Mike, if I were, all this market stuff's got me concerned. I just want to say the heck with it. I want someone else to manage my stuff, roll my puts, babysit my calls for me. Where should I go? What should I do?
By all means, you should come to St. Charles. But if you live too far away from there, like, well, quite frankly, a lot of my clients do, feel free to contact me. I'm more than happy to work with anyone. 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
And last but not least, the one-eyed man of the ice rinks, Mr. Rock Lobster. Sir, if I want to go check out what's cooking in the land of the pit, where should I go? What should I do?
Well, if you don't want to let Tusa do it for you, you can come to Option Pit. We will help teach you how to do it. My new vol newsletter. It's actually off to a really good start as far as subscribers and trade ideas and stuff like that. If you want live mentoring and understand how to trade those vol products, you can do it. You just follow the letter and watch. Easiest way to learn, and you will learn something. You can go find that at optionpit.com.
There you go, optionpit.com. Click on the Vol newsletter tab there, and you can sign up there. If you haven't got enough of the Rock Lobster's all things Vol talk, then he's got a lot for you in newsletter form. And on behalf of the Rock Lobster and Uncle Mike and Lex, and indeed myself, I thank all of you out there in the listening audience for downloading, streaming, subscribing, for sending in such great questions. Keep them coming, even if there's more about SVXY. We can take it. You guys got a lot on your mind on that one. And we'll see you back here on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.